Hi, and welcome to Two CPAs and the Mic, the podcast where we talk tax, finance, and all things related to business. Whether you're a business owner, working professional, or someone who wants to start a career in accounting, this is the podcast for you. Hosted by CCK Strategies partners Jeff Frable and Sara, we dive into relevant business and tax matters with working professionals to make these topics less intimidating, relatable, and dare we say fun? Let's get down to business.
Welcome to another episode of Two CPAs and the Mic. We are so glad you joined us today. I am Jeff Frable with CCK Strategies. I have my trusty co-host, Sara. Hey, Sara.
Hey, Frable. How's it going?
It's going great today. We're just racking them up, these episodes. We have KP back in the studio today. She wasn't with us last time, but she's back today.
We're so glad you're back.
What's up, Christy?
Thank you. Just
Everything?
Yeah.
Got a lot of, she's got a graduating senior this year. And so it's a lot of craziness in the porterhouse.
It is a lot of celebration, a lot of challenges. It's another podcast idea, how to manage and work through all the challenges and still celebrate.
Yep.
So I think it's going pretty good.
Good.
But the key is that we are no different than all of our tens of listeners, are we? I mean, we have kids that
went from 5s to 10s. Yes.
We'll be at dozens soon.
Yes.
Well, and while we're here, I am going to give a special shout out to our biggest fan, and she lives in Richmond, Virginia. Her name is Riley Grace Sawyer.
What's her maiden name?
Frable.
Sorry.
Riley Grace, I love you. I thank you for listening, being our one constant listener, but that's a good kid for you. That's a great daughter for you. We are happy you joined us today. We are talking relevant business and tax topics. We're applying straight talk, sometimes unexpected humor, depending on the subject. And we are using real world talk to talk about items and issues that can get kind of stuffy in our industry. And our goal is to make that as unstuffy as possible. Right, Sara?
That's right.
So, Sara, we have a very special guest today with us. Would you?
Am I going to introduce the episode or are you?
I guess I haven't done that yet.
You haven't done that.
Well,
Sara, you should do it.
Yeah, I'm no good. Go
okay. Ahead. Well, I'm going to steal Jeff's what he normally does. So today we're going global. We are going to be talking about all things international. Well, now let's pare that down a little bit. Not really all things international, but we are going to talk about how small businesses and as they're venturing out, and they may be venturing out past the borders of the U.S. and what does that look like? So we have with us today a partner at CCK Strategies, Kaitlin Flinn. Welcome, Kaitlin.
Hi, thank you.
Hey, Kaitlin.
Yes. All right, Kaitlin, why don't you tell us a little bit about yourself? You can make it professional. You can make it personal, whatever you want to do.
Oh. So many options.
I know. 10 minutes or less. 10 minutes or less.
Yeah. Well, I was born.
Where was you born?
Yes. No, like Sara said, I'm a partner at CCK. I've been at CCK for a little over 11 years. I'm coming up on 12. And before that, I was at one of the largest firms in the world and got a little bit of experience trying that world out, a lot of learning. That's where I first picked up some of my international interests and worked with some of these multinational companies that were giants. And so I came to CCK and said, hey, I really like doing this. I like seeing what Brazil does in their tax system. And I like seeing what happens in the UK. And so CCK said, great, we need somebody to do that. And ever since, I have worked on international clients. I build a book of business throughout the world. And it's pretty amazing to have clients reaching pretty much every continent.
Yeah.
Not Antarctica, but
Not yet.
Not yet.
Yes. We got to get those paintings.
So we got to get these listeners up so that I can find someone in Antarctica.
If you know someone in Antarctica that wants to listen to a podcast, send them a link.
Yes.
Yes.
Well, Kaitlin, the thing about this topic today is this is going to be a difficult episode. Not because of you. You're going to make it easy, but this is a very complicated subject.
Yes.
And I want to stay away from using the phrase that it's such a cliche that the world gets smaller and smaller, but it really does. And so these small business owners can fall into this trap pretty easily of having an international requirement of some kind or an international tax impact and not really knowing it. It started kind of across state lines, and it's grown to be international. And so I think you'll do a great job of breaking this down for us and making it kind of simple where it can be simple. But the bottom line is it's pretty complicated.
That's right.
Well, and the other thing about it is, you addressed it, and I wanted to know, is what really kind of, because you kind of are our internal international expert here at the firm. And really, what was it that really drew you to that niche or to that expertise?
Well, I've always loved to travel. So I get that from my parents. They always took every large anniversary trip to somewhere international and would come back and share their experience with us. And so really, as soon as I could, when I had just turned 18, I went to Italy, France, and England with a couple of other kids. And
kids?
We didn't have phones that would tell us where we were going.
Right.
We went to internet cafes and printed out maps.
Nice.
So
You went by yourself or with your parents?
Myself. No, with 3 other kids.
Oh, wow.
Yeah.
You've got amazing parents.
Yes. They
Or
didn't
you were
think
an
I
amazing
would.
kid.
They told me if I raised the money, I could go, and they didn't think I would. And so I showed them.
Yeah.
I raised the money and
Mhm.
had everything planned out. And so that was my first taste of the international world. And I really didn't think that accounting and international would connect. But my very first internship, I worked with missionaries, and a lot of them have to file a foreign bank account report because they end up getting donations to them that exceed $10,000.
Mm-hmm.
And so being able to work with people and make these international rules a little less complicated really energized me. So getting that experience in a big firm to see how it worked on the completely opposite scale of these large corporations, I just continued that fire of how do I make this easier for people to learn new cultures, have those business relationships, but not make it so overly complicated that it discourages them.
Right. And small business owners are wanting to venture out beyond the U.S. borders.
Right.
So what are some things that you're seeing that would trigger having to do anything international? Like, am I selling to vendors overseas? Am I hiring people overseas? Like, what kind of things are you seeing that triggers that?
Because I would imagine as a small business owner, my initial thought would be, well, I'm not over there, or I don't have a presence. I don't have a presence there. You're telling me I have an international tax problem?
Right.
Why?
Yeah.
Kaitlin, in that answer, we've said things, and I think we use terms internally. Will you also define what small business is? Because a lot of times I think of CCK as middle market focused and what we call small business internally. So can you address a little bit of that too in sizing?
Do you remember all of that?
we really believe in Kaitlin. Our audience needs to know how much we believe in Kaitlin. We're really comfortable peppering
Just
her
speak
with
for the next 30 minutes.
Right. We're just going to sit back, cross my legs and sip my coffee. Okay, go.
I think I am just going to start, and then if I forget anything.
My name is Kaitlin Flinn.
I was born.
So I work with a wide range of clients, however you define them, whether it's small or mid-size. And this is an issue that reaches everyone. Because if you sell a good, it's very likely that you are going to reach an international audience. I was just thinking and preparing for this today, like I just bought a swimsuit from a small company in Australia. Like how weird. It's not weird because we do that all the time now.
Because online is bringing us together.
That's right. And I was advertised on Instagram. And so if you're selling a good, you're naturally going to have some of that exposure. If you're doing advertising on social media, or if you're using Amazon, or you're using some of these platforms like Shopify, you have that opportunity to reach a really big audience. So whether you are starting on day one, or if you have been around for 20 years and have millions of dollars, you might have a very similar way of operating internationally. So that's the first way that a lot of clients get exposure to international income. They might set up an Amazon UK account, and all of a sudden now you have some foreign sales, you might have some VAT tax, which
Ooh.
is a lot like sales tax. So just think of it. It's got complicated rules, but it's just like sales
And you said
tax.
VAT as in
Value added tax.
VAT. Yeah.
That's right. And so most likely you're not going to pay taxes to those local countries if you are in the US doing all your business here and you just sell abroad. So that's the nice thing of you probably haven't open yourself up too much to exposure. But if you start opening an international PayPal account, if you start opening a Wise account, there's international Stripe accounts, you might actually have a foreign financial asset that you have to report. So that is something that most people don't think of, that it comes with this extra filing that has to be disclosed and really has some pretty high penalties associated with it.
If you don't. Yeah.
Well, the interesting thing is at an extremely high level. So you're like going, me as an owner may go, how's the IRS know about this kind of stuff? Well, there just happens to be a question on Schedule B, which is where you list your interest income. And doesn't that question basically ask, do you have more than $10,000 in a foreign bank account?
Yeah, that's right.
And a lot of times, most people just answer it no. But they don't, because it's just words. It's just questions. What does it mean? But that could get you into some trouble down the road if you actually have that account.
That's right. We also find that banks are talking with governments. So there was another wave. I was just talking to an attorney about this recently. There was another wave of letters that the government sends out to banks requesting information on the people that bank with them. And these are international accounts. So the government does try to find people that are hiding money. Now, the intention isn't to capture that small business owner who didn't know the rules. It's really to cut down on fraud and money laundering and make the U.S. a safer place. But unfortunately, it means that small businesses have to pay attention to these complicated rules because they might accidentally fall under that requirement.
So just to recap what I think I hear you saying, if I'm selling stuff overseas, or let's just say overseas, there's a difference between whether or not I have a tax impact. In other words, whether I have to report tax in that country because of that sale, that's completely different than what I would call a disclosure requirement with the government that says I have this PayPal or this Stripe or whatever account, or even just a regular bank account overseas.
Yeah, that's exactly right.
So what are you said there's some significant penalties. And I guess let's talk about the form we're talking about. It's got the most interesting name of any tax form I think of. What are we talking about here?
Yeah, this is FinCEN 114. We call it an FBAR.
An FBAR, yeah.
It sounds like an energy bar.
Yeah, it does.
Yeah, and other things as well. So, and what does FBAR stand for? Financial banking, maybe
account report.
Okay, financial banking.
So easy.
Yeah, so easy. So this thing is due when?
It is due October 15th. The original deadline is April 15th, but there's an automatic extension to file by October, regardless of whether you're an individual or a corporation.
Okay.
And there's no tax due with this form. It's
right.
just reporting.
That's right. And it actually doesn't go to the IRS. This one goes to the Treasury. Now, there is a similar form that goes with your income tax return that does go to the IRS, and it's a financial asset account. So often what you report on this FBAR also goes on your income tax return too.
And you're required to file this if you average over 10,000 for the year, or if you've hit over 10,000 for the year.
Yeah, if you exceed 10,000 at any time during the year, you have a filing until you close that bank account.
Okay, so I have one sale overseas. I do it for $15,000. It goes into whatever account, comes back over to the U.S., whatever. I have a requirement for that.
That's right.
And let's talk penalties.
Yeah. So the penalty for an FBAR failure to file could be up to 50% of the value of the account at the highest point anytime in the year.
Wow.
And that's an annual penalty.
Yeah, so chances are that if I'm not filing an FBAR, the chances of me just becoming eligible to file that FBAR this year are probably fairly low. I have other years that have not been filed. And so when you're saying this is an annual type of potential penalty.
Right. That's right.
So that's big numbers.
Big numbers.
May I ask a question?
Yes, sure.
Because Sara, as you said, this is complex.
Mhm.
All of it starts with complexity. Do you guys mind if I simplify it with something else? Let's say I am an artist and I have an Etsy store and I'm doing really well. I'm starting to specialize in national parks, and my watercolors are now getting the attention of people abroad. And so I'm thinking, wow, this is going to be a great opportunity. I'm so excited. Wow, what's next? At what point do I need to talk to a professional? Because based on what you're saying, my Etsy shop is going to be making money. And if I don't file something, my talent and my business could be in real trouble. Am I hearing that right?
I would say in that situation, you're still in the US selling products abroad. So you don't have anyone going overseas. You don't have a need to set up a separate bank account. So most likely, you're not going to get into any trouble with how you're approaching it. Now, what we've seen is, okay, let's say you have an Etsy shop and now you want to hire someone to help with marketing. It's very common to hire a foreign contractor these days because of the labor shortages that we've seen and just the ability to expand into different labor markets and the different rates of the employment costs. We see a lot of people expanding to foreign contractors. So even that, you have to be mindful. Am I sending this person a 1099? You would only do that if they're a U.S. person. If they're a foreign international individual, then it's on you to document that. But otherwise, most likely you won't have that issue unless you... Another example would be, okay, I'm doing really well in this country. Let's say it's Costa Rica. And you're like, I actually want to start living in Costa Rica for part of the time because I have a huge customer base there. I mean, Costa Rica specifically comes up like once a year for people that want to buy property there. So, and then I'll turn it into an Airbnb for part of the time. Well, that's where you really need to focus. Okay, you now are getting income from a local country. It's
foreign sourced.
It's foreign source. So
Yes.
it's not a sale from the US. It is foreign source rent in Costa Rica. And then you have some liability potentially because you're renting it to people. So maybe you want an entity to protect yourself.
And you're talking tax liability, right?
Well, I'm talking legal liability.
Okay.
I mean,
okay.
For our listeners, I'm not an attorney. And this is not legal
Here's
advice.
the disclaimer.
But I've heard some attorneys say that you might want an entity for legal liability. So if you get to that point, I think a lot of people think, well, I'm just having Airbnb. This is just my personal rental. But you might have an entity, you might have a foreign bank account because maybe there's a requirement through however you're doing the rental. I mean, you've now set yourself up to a whole host of exposure in making sure you file and disclose the right accounts.
So let me piggyback on your question, Christy. So let's say I'm a very small business operation, like you were saying there, and I've come to the realization that I may have, from listening to this podcast and your expertise, I might say I have some exposure. And we've been talking about like these FBARs and penalties based upon your experience and what you've seen. Because like I was saying before, if I have one that's due now, it's possible I had one due in prior years. That's a great opportunity to just stick your head in the sand and try to make it all go away. Is your recommendation that you hit this head on and take care of those old filings? And I guess maybe what I'm asking is, in your experience, and you kind of mentioned this before too, do you see where the government is like targeting those people to penalize them significantly, or they just want to see them get into compliance? I
would say that you should always try to get into compliance. That's the CPA answer, right?
Yeah, right.
So there's some options you have, like through the streamlined disclosure program, to where you can disclose it, write a case of saying, hey, this was not intentional. I did not try to willfully go against the government rules. I didn't even know. And you can state your case. And so most of the time we see that, and I've talked to attorneys and I've talked to other accountants that have followed similar suit, the government generally says, great, we appreciate you disclosing it. You've taken care. There is a 5% tax you have to pay in that program. And so generally we see that covered. I would say we have some case law that says they've even gone after traveling nurses, some people who don't fit the profile of being someone who has a lot of money that they're intentionally trying to hide from the government. But it has been many years since I've seen that type of case.
Yeah.
And I haven't seen our clients receive any letters saying that they're not filing, that the government noticed they weren't filing a foreign bank account report. But it is always good to get yourself into compliance and just face it head on the off chance that it could be looked at.
Right. And you touched on where I was going, is that generally speaking, you're going to have more of an issue if you're this big operating business that's purposely trying to get away from these things versus someone that really just didn't know.
Ignorance.
Yeah. And ignorance doesn't always get you out, but sometimes they're really looking to cut down on the fraud. Is what you said earlier.
Yeah, that's right.
Okay. So what are you laughing at? What are you laughing at?
I mean, we just talked earlier, like, hey, I'm gonna lead this episode, and you're getting
you go
into
for it. You go for it. No, you go for it, girl.
You had a thought. You go. You go. It's good. It's so much. This is how it
always.
This is why we laughed so hard when when he said that.
Yeah. So I'm going to turn it over to Sara right now and let her ask her next question. Go for it, Sara.
Okay. So we've been talking about international tax and reporting and disclosures and things like that. But let's get into the real nuts and bolts of international tax matters. Like, how do I know that I have a reporting requirement, tax reporting requirement? And so we've already talked about foreign sourced income. Is there anything else that we need that our clients would need to look at, or small business owners, to really get them like, oh, I really need to look at this?
Well, I do want to just touch really quickly, because I haven't specifically said it on the foreign source income. I do have people at least once a year come to me thinking that foreign source income does not need to be reported in the U.S.
Oh,
so
yes, that's a good point.
I do want to say it out loud that the U.S. pretty much taxes everything.
Right.
So it all needs to be.
So if I did services and provided, even though I may have remotely provided services, I stayed in the U.S., but it was to somebody in Canada.
Right.
And they paid me their Canadian dollars and came back to me. I don't know if it's Canadian dollars, if that's the right currency.
Yes.
Okay, good. But I mean, that is income. I mean, I earned that in the U.S. So even though it came to me from Canada or China or wherever, I have to report that as income.
That's right. And so let's take your example and say you're an engineer or you're in construction and you actually have people go on site to Canada. And some of the work's done in the US, but a lot of it is on the ground in Canada. Well, the person paying you might withhold Canadian income tax from what they're paying you. And so in that case, you have the opportunity, you have to pick it up in the US, but you have foreign taxes that were paid. So you can offset your U.S. income tax with the amount of foreign taxes that are paid.
And that's a foreign tax credit.
That's right.
That's right. And we'll definitely get into what all the ramifications and specifics of that. But would that person have a filing requirement in Canada? Like, how would they, is that tricky? Is that something that a U.S. CPA could consult on, or would someone need to go seek out a Canadian CPA?
Right. So it is country by country. Some say the withholding is enough. And so we're withholding at a rate that might even be the highest rate, that if you filed a return, you might get a little bit of a refund. So there's an incentive to where you might want to file a return, but we also see often where it's not large enough to where finding a Canadian accountant to file that return and get it submitted is worth the effort or the cost.
Okay.
So yes, maybe there's some US CPAs out there that could advise on each country's rules, but most likely they need to help you find someone locally. And so we're part of multiple different networks like our BDO Alliance and IR Global, to where I have relationships with Canadian CPAs. So I can go to them and say, hey, here's my situation for my client. What do you recommend? And get that solved.
That's awesome. The value of good networking.
That's right.
Well, that's the point I was going to make is you may not know all the questions or the answers to the questions, but there's a whole lot of value in knowing who to contact.
Yep.
And so if anyone has that kind of issue, it's worth at least asking the question to see if you know somebody.
That's right.
Because you know a lot of people.
Yes, I do.
And it doesn't have to be specific to tax with your network. Is that correct?
Yeah, that's right. Yeah, I have attorneys within my network, financial advisors, private investigators. So that's one of my favorite people to talk to, is a private investigator in California.
That's awesome.
So yeah, anything a business would need, we can help.
This is so exciting. It sounds like, in CSI, when everyone wants to do forensics, Kaitlin makes international sound so fun. Cool.
For sure. Okay, so foreign sourced income, what else would trigger international tax filings?
Well, we have to look at foreign financial assets. So one of the things, I work with a lot of clients in Australia. And sometimes they lived in Australia for 10 years and now they're U.S. persons and they've been in the U.S. for 20 years. Well, we have to look at their foreign pensions to see, does that trigger a filing? So that's another one. Like I said, the bank accounts, mutual funds that you've invested in foreign markets, that might have a special disclosure. And sometimes we find that a lot of our clients don't even realize they've invested in something foreign until they get their financial packet from their brokers. And then we have all these extra forms to fill out. So it's important to work with someone who knows how to recognize an international form and be very comfortable with those disclosures.
Right. And what about owning? And when should I, that may be too broad of a topic, but when should I start a company in a foreign country? Or what if I already have opened up a LLC in a foreign country? What do I do then?
Yeah. Well, first, it's extremely important you talk to a tax advisor, because I have lots of conversations with people where they say, oh, yeah, I just started doing business. I bought this company in the UK, or I just set up a foreign branch in the Netherlands. Well, both of those come with a lot of disclosures. I always describe it as a mini tax return within a larger tax return. So I'm basically filing a whole foreign tax return for your foreign company inside of your normal U.S. filings. And that's another one that comes with super steep penalties if you don't file it. We're looking at like $10,000 per year. And those are ones that if the IRS realizes that you didn't file that when you should have, they will send you a letter. And that's something you need to then plead your case to them of why you don't have to file that.
Right. Or why you missed, or please forgive me for missing this filing.
Yes, exactly. I didn't realize.
Kaitlin writes the best please forgive me letters.
Yes.
Kaitlin, this is going a little bit off topic, but there's one thing that I don't think you kind of touched on it a minute ago, but address and talk about the terms, and I'm going to butcher this, but what's the term used for someone that emigrates into the United States? Is that right? Is that the right term? Comes from a foreign country. Is it an expat? Is that what they refer?
Expat's the opposite.
Okay, yeah. What is that relationship there?
Sure. So the IRS taxes U.S. persons, and that is very broad. We have people that are citizens that get taxed. We're people that are living here with maybe a visa. So it could be a student visa, it could be a work visa, and they get taxed on their U.S. income. If they're here long enough in the U.S., then they're considered just like a citizen, and they have to file worldwide, disclose all their worldwide income. And then you have green card holders, which basically are just like U.S. citizens when it comes to U.S. taxes. So you have those, what I think of as inbound relationships, so U.S. relationships, but then you have companies in the U.S. that then own activity internationally, Or you have US persons that go and live in the UK or Australia. So those are your expats. And they still have to file US taxes, even if they've been in a foreign country for 25 years.
Okay.
And I have a lot of conversations with individuals like that.
Right. Yeah, we're not talking about just opening a business somewhere else. We're talking about changing your lifestyle or moving somewhere different, right?
Right. That's right. And I think the perception is, well, I moved out of the United States. I don't need to file any US taxes because I only have an Australian wage. The government says, I don't care. You need to show me everything that you make. You need to disclose all of your bank accounts that you have in Australia. And so that's why I have a lot of those conversations, because people have no clue because they've been abroad. Talked to one person who moved out of the US when she was like 7. And then she lived in the UK, and then she's in Australia, and she's just now realizing that as a US citizen, she should have been filing for.
That's crazy.
Whenever she started making money.
That's right.
Wow.
So what do you do in that kind of situation? How do you resolve that kind of situation?
Well, it goes back to the conversation we had earlier of we have the Streamline program, but you really have to look at, okay, we have a lot of activity. What is the risk? What's the cost? How do we get you into compliance? And how do we do it in the most tax advantageous or cheapest way for you that satisfies what the government requires?
And can they go, in theory, back as far as they want on that? Or is there a statute of limitations type of scenario?
When you go under the Streamline program, you go 6 years, you file 6 years of foreign bank account reports, and then you generally 3 years of income tax. So in theory, they could go back, I think, as far as the criminal statutes allow, because that is part of a conversation of, is this now criminal if you've had so
because they're thinking it's
many
fraud.
years? That's right.
Yeah.
The longer it goes, the more that potential. But again, it's not something that you really should put your head in the sand.
That's right.
But engage with professionals that know what they're doing and how to approach those kind of situations, because the bottom line is they're more than likely not the first person in the world that's ever had that situation. So
That's exactly right. That's exactly right. And there's some that the assets are so significant that we work with attorneys. And even there's something called a COVOL agreement where all of our conversations are protected, and it provides some privacy for the individual that's doing the disclosures. And so it is one of those things, if you have a lot of assets, I mean, we're talking like 10 million of assets that genuinely did not know that had to be disclosed, because in one case it was inherited from someone that passed. And that's the last thing that you're thinking of when you lose a close family member of, I wonder if I should disclose all of this on my taxes.
Right.
I mean, we think that.
Right. That's why they should work with us.
Right. Exactly. Exactly. Okay. So we've talked about foreign source income, owning part of a foreign company, having boots on the ground. What terms should we be looking for? And things that, have come up just from even just a tax perspective. We've already mentioned foreign tax credit, which is you're paying tax to a foreign country and the U.S. allows a credit on all or a portion of those withholdings, those foreign withholdings. What else is out there? Like, I've heard of guilty. What's guilty?
Yeah, that's my favorite one.
I'm not an attorney. You just said you weren't an attorney.
Right. Yeah, my favorite one's guilty, not because of what it taxes or what it does, because I actually hate it in that regard, but because I think they came up with the name first and then built out what it stood for later, because the name is global, intangible, low tax income, which in and of itself doesn't flow very well and make a whole lot of sense. So that's why people just call it guilty. But it's why it's so important to talk to a tax advisor if you set up a subsidiary in a different country or buy a company in another country, because it's a way that the government can tax your foreign earnings that are held in a corporation. So typically we have corporations and you think, okay, well, I'm not taxed until I take the money out, like in a dividend. The corporation itself is taxed. But in this case, it's a way to recapture all of that into the US. So this all started in 2017. This was President Trump's original tax bill where I think it was designed to offset a lot of these really favorable tax incentives like 199A, the QBI, to balance that tax bill out. So hit you hard on the international, but reward some of the domestic, which is in alignment with what his policy has consistently been. So, but it is very punitive. There's some ways, though, that we can exempt you. We can give you a different structure. There's ways we can make it better for our clients and avoid it.
Nice. Okay. And then one of the things, and here's what I just absolutely love about Kaitlin and her love for international is that, and what I'm even seeing too, I don't know if you've seen it a whole lot, Jeff, here lately, I feel like more and more of my clients are having some kind of international footprint somewhere. And so initially when Kaitlin was, we're going to do a little backstory, when Kaitlin initially was doing international work, I was like, I don't want anything to do with that. I don't have anything. And I think in the last year and a half to 2 years, I've asked you more questions and I've had more clients that have that international footprint. Are you seeing that too, Jeff?
Well, it's because the world gets smaller.
Yes.
I mean, it pops up and it's more common. And a lot of times it happens when someone's not even, go back to Christy's example. I'm just doing these watercolor paintings and I'm, have a passion and find a way to monetize it. And all of a sudden someone in Australia wants my watercolors. Yeah. So it just naturally happens.
Yeah. So more and more things are popping up. And one of the things that popped up this year was I'm going to admit I had no clue there were tax treaties with other countries.
So you don't know it all, Sara?
No, I don't know it all. Reference to another episode. So there's tax treaties with other countries that are really favorable for people reporting income in the U.S. So I know it's a very huge topic, but kind of like get into like a very broad explanation of what tax treaties are.
Sure. So our government created an agreement with many other countries. I don't remember how many there are, but let's say there's 30 tax treaties. And it's generally with most of our closest allies, but it also is an incentive for the two countries to trade among each other. And so there's an agreement and there's language in it that can help guide people on if you move to another country, like we were talking about earlier, how should you consider that UK pension? How should you consider this royalty that you're receiving? And so it's kind of a guideline of what income can you exempt from the US? You might still have to report it.
Yeah.
There is a form just for telling the government, these are all the treaties that I'm relying on. And
is that the 8471? Did I remember?
33.
Oh,
you got a little arrogant there, Sara.
I'm trying.
Yes. I think you mixed 5471 and 8833. So, but it's all right.
We're nerding out a little bit over here. All right.
We said no code heads.
I know. Those are form numbers.
They're form numbers.
Yeah. So, that's simply what it is. It's just a way to make things a little bit easier, in theory, to be able to exclude some of your income from the U.S.
That's awesome. I'll just say, just this year, knowing about tax treaties, I helped one of my clients using the tax treaties not have to report about $25,000 of income.
Right.
And they had been, and they were a new client and they had been reporting that. And then they were so thankful. So it was a good thing. So working with Kaitlin is pretty awesome.
Well, I know that anytime someone calls me and they say something about that even starts with the F word, foreign, I go, hey, I've got a teammate that knows all about this stuff. So Kaitlin gets emails from me like, hey, would you talk to this person or that person? And I don't even try to pretend to know it. So.
You mean you just don't throw FBARs around?
FBARs or
F-bombs.
F-bombs.
All right. So I feel like we did a pretty good job.
I think so.
Do you have another question?
Well, I had one since I was shut up this whole time. I was just going to say, do you have anything that you'd like to say to wrap up this conversation? Because I know it's very complicated. It's very deep. but yet there's people listening to our tens of listeners, which we're going to dozens of listeners soon.
Yes.
But just give that assurance and calming, because we've talked a lot about penalties and things like that. But if I'm listening to this and I've got any inclination that I might have an issue or a question, what should I do?
Yeah. So first, I would say they're not the only ones. And I think it's really important to make sure that you ask questions. So find your CPA, find your attorney if needed, and say, this is something I'm doing. So maybe it's not even a question. Just tell them what you're doing or what you're thinking about so that they can make sure they identify, okay, here's some of the considerations. Because what you don't want to do is wait. Maybe you've set up a foreign entity and then you're waiting till you file the taxes and you go to look at review and you're like, oh yeah, by the way, I set this thing up. Well, you might not have any moves to make at that point. You might not be able to create the most tax efficient structure. So I think it's just really important to find that person you trust, that CPA, attorney advisor, and be in that constant communication with them of things you're thinking about, ways you're changing your business, because that's how we find these sort of international components or these traps that we need to help fix for our clients.
We've talked on a previous episode about entity selection, and we talked about people that come in and go, well, my attorney set up this LLC and I have no idea what to do with it or why. I would say that ratchets up several levels when we're talking foreign.
That's
so
right.
If you are a business owner and you do have a foreign presence of some kind and you have a structure, but you have no idea what that structure is, it's probably a good idea to make sure you know whether that's with the person that set that up for you or if you wanted to talk to someone else just to get a second opinion or something like that.
Yeah, absolutely.
Because if you ignore it, there's lots of penalties that are involved in this kind of thing.
Right. That's right.
Well, Kaitlin, I think you've done a great job of kind of keeping this on a low level for us. And that's just a testimony of who you are as a professional, that you can get as far in the weeds as you need to be, but you can also keep it high. And so one of the reasons why we love and appreciate you as our partner. And so have you talked to Kaitlin about this?
No.
Oh, okay. So we have a surprise for you.
Yes.
But now, if you listen to all of our episodes, you would know this is coming. But
Of course she does. She has it. She knows.
She's acting surprised. She's acting surprised.
She's listening, memorized.
It is
every
time.
single one.
Clarence, we need something
Like
to go with
rapid
fire. So this is rapid fire.
Yeah.
I like the way Sara says it.
Yeah.
When I say rapid fire.
Yes, yes.
Well, I'm learning that I'm not
Yes.
needed on this podcast anymore.
Yeah.
All right. Go for it, Sara.
All right. We're going to start off easy.
Okay.
Are you morning person or night owl? Or in between?
I'm really in between.
Like you,
I just
that's
don't get a
part
lot of
your day?
sleep.
I know, because you got 2 young kiddos.
Yeah.
Yes. All right. What time do you usually go to bed?
I would love to say 10, but it's closer to midnight.
Ooh, that's so late.
Yeah.
All right. What's your Hogwarts house?
Oh, I think I'm a Ravenclaw.
Okay. I'm a Ravenclaw too.
Okay.
All that you soak up the knowledge,
Yes,
right?
that's right.
All right. Beach or mountains?
Beach.
Okay. And then if you could live in any country, what would you live? Or where would you live?
Probably Ireland.
Oh, nice. Okay.
It's very beautiful. It's very easy to get around. People are very nice. No language barrier. And then you have access to all of Europe very easily and cheaply.
Yes.
So
That's good.
See, I was going to ask the ultimate nerd question earlier, like, what's your favorite international country that you like to deal tax law with? I mean,
Well, I got close.
Because there's probably some when they go, well, I'm in Bermuda or whatever. You go, oh no. But there's some that you go, oh, I love this, and they have a great treaty and all that. What's your favorite besides the United States of America?
Right, right. Well, Australia is the first one that comes to mind. Similar answer, I guess, to where I want to live, in that the people are very nice. I like the business culture there. They respect advisors, and we just work very collaboratively. But then the tax laws are nice too. I mean, anytime that, and this isn't probably the most client advantageous answer, but any place where the tax rate is higher in that country than in the US, it's like, well, you don't have to pay any more taxes because you're already paying probably too much over there. So it does simplify things a little bit from then having to plan, okay, you're paying maybe 15% there and then 10% here. That can get a lot more complicated from a cash flow planning standpoint.
Again,
I have one more question.
Yeah, okay.
I mean, I'm going to add, because it made me trigger.
I nerded out.
Yes.
Okay.
How many countries have you visited?
Oh, I don't know. I haven't counted. Maybe 15.
Nice. Okay.
Yeah, she's a world traveler.
Yeah.
I do that every summer at Epcot. I go to Florida. And I ask them, well, tell me about your tax treaties here. And they look at me like I don't know what I'm talking about, because I don't. So.
That's for a future AI, an AI podcast.
Well, Kaitlin, you have been a wonderful guest. We knew you would be. Very interesting. And I guess almost more than any other episode we've had, I'd say that if you feel like you have an issue that we've uncovered, even an inkling, I think you should let us know. You can contact us at podcast@cckcpa.com. We'd love to connect you with Kaitlin if you have any kind of questions or comments or concerns, or if you just have to, if you want to talk about how much you love this podcast or how much you hate it, you can leave us a comment at podcast@cckcpa.com as well. If you hate us, Sara will respond to you quickly. But we do appreciate you listening. We do have several thank yous that we always do at the end of every show. First of all, thank you to CCK Strategies for allowing us this platform to do this kind of marketing and have some fun at the same time. KP, thanks as always for your insight. Robert, Sara's husband, for the intro and outro music. Is he going to be changing that soon? Did you say he was going to work on a new one?
No, he has several.
He has several
that he's been nerding around with.
We need to look into that library, maybe see if we should change things up. But thank you, Robert, very much.
Gotta wait 90 days.
Yeah, 90 days. Yeah. Listen to our last episode. Clarence Fisher, Tulsa Internet Marketing Services, thank you so much. We appreciate you. Natalie Renfro, Emily Johansson, thank you so much for all your work in getting us on the air. Again, thank you for listening. We hope you join us next time when these two CPAs get together and you get to find out who's on the mic.
The information provided on this podcast is for general informational and educational purposes only and does not constitute accounting, tax, legal, or financial advice. While we strive to provide accurate and up-to-date information, laws and regulations change and individual circumstances vary. Always consult with a qualified CPA or professional advisor before making any financial or business decisions. The views expressed by the hosts and guests are their own and do not necessarily reflect the opinions of any organizations they are affiliated with. Listening to this podcast does not create a client-accountant relationship. By listening to this podcast, you acknowledge and agree to those terms. And that's a wrap for this episode of Two CPAs in the Mic. If you found today's episode helpful, please subscribe, share, and leave us a review. Have questions or ideas for a topic? Reach out. We'd love to hear from you. Email us at podcast@cckcpa.com.